guests. Let me also welcome Sandip Sabharwal, who's joining us on the show right now. Hi, Sandeep. Good morning and great to be speaking with you. Sandeep, firstly, the big trend that we are tracking is that FIs have made a comeback. In the month gone by, the FIs were actually the net buyers in the cash market. But like the famous saying says that sell in May and go away. Will you agree with that? And are you also looking to cut down your positions in the upcoming month? What's the outlook overall?
Actually, if you look at it on a macro basis, things are not bad in India. Things are only improving. Most economic data will keep on improving as we go through this year. The only which remains are the geopolitical risks, where we are unsure of how that's going to pan out. But that will be a short-term impact. So, in my view, foreign investor flows should continue. There could be some volatility, and when we see some bounce back in the US dollar globally, so that could slow down flows for some time, but directionally, I think things should look good.
Sandeep, but in the month of May, you would imagine that IPOs will start. Earning season has not been that great. You will hear news on the trade settlement, which means that markets will start getting more and more clarity. So April was about little bit of oversold conditions, FIs coming back, suspense around earnings. All that is not going to be at play in the month of May.
Yes, so I would think that weak results for the March quarter were already expected in general because obviously the remnants of the slowdown was still there. The monetary policy easing, as you know, started just 3 odd months back, so it takes typically 6 months for that to play out on the and we do have the tax cut impact plus any potential deal on the tariffs front, which could be an incremental positive. So I think directionally, on a macro basis, things are moving fine. Now, the markets have staged a rate, I think, from 21,800 odd to 24,300. So there's been a sustained straight rally. Once that happens, you could have a phase of consolidation, some correction, etc. But I think that's all part of the overall market movement. So I don't think that there's any reason to become any significantly negative on the markets at this point of time.
Um, I'll start with some obvious names here, Sandeep. Zomato. It has had breakout moment in 2023 and 2024. Now that same franchise is feeling the heat of slowdown. Is it a good time to buy into a franchise like Zomato? Because what they're doing is that they are investing right now with the hope that they're getting future ready. Is there merit in buying this decline in Zomato, this numbness in Zomato?
Zomato, people need to understand what Zomato is doing. So they had significant moat in the foods business, food delivery business. It was largely a duopoly, and they were coming to a phase where they could generate significant cash flows. So what do? Instead of using that cash flow and generating shareholder value, they start investing in a segment where no one has any moat, basically quick commerce, and there's so much competition out there. On top of that, they decide to invest into huge number of dark stores where they'll actually start holding more and more inventory. So if you hold more and more inventory, then ROE, ROC, everything keeps on going down of the business. Okay. I believe it's a risky strategy. Now, risky strategies could play out over the long run, but I think it's a strategy which will not be good for minority shareholders, and too much money is going into a segment where profitability will be low, ROEs, ROC will be low rather than the core business, which was highly profitable. So I think it's going to be a tough phase for minority shareholders.
Right, that's a take coming in actually when you talk about Zomato.
A lot of other earnings candidates to watch out for. And Sandeep, I specifically wanted to have your take on Bandhan Bank. This is because this is one of those names which has been debated around that it could be a good story to ride in terms of the transition that the company has been undergoing. But given the earnings, it's been once again a soft quarter for the bank where the slippages have gone up. But despite the fact the brokerages are holding a positive view on this one, and they're saying that the company is undergoing a transition, and in some time from now, the numbers will also start reflecting in. What is your take coming in on Bandhan Bank post the earnings? Do you also believe that one should have faith in the undergoing transition and the steps that the bank is taking?
I think it'll take a lot of time to play out because in financials, I think once stress builds in the balance sheet, it takes a long time for that to get resolved. Now, the good point is that most of the banks and FCs who have come out with results have indicated that stress on the unsecured side, MFI side, etc., seems to have peaked, and from here on, things will only improve. So I think if that scenario plays out, I think over next 6 to 9 months, we could also see Bandhan Bank financials improve. But I think it's going to be a long road.
Right. Sandeep, wanted to get your view actually on the cement pack. How is that one looking to you? Because you have Jeffries has come out with a note where they are actually saying that they're expecting the prices to actually see a good uptick in this financial year after at least 2 years of decline that we've seen in the pricing power for the cement pack. How are you gauging the cement pack, and given the fact that now the narrative is look inwards, look at domestic oriented counters, do you think cement is a sector that will make you, that is attractive to you?
So news flow out of cement companies have been mixed. Now, the main issue of higher prices sustaining is that the supply increases are much more than demand increase. And in any commodity industry, as all of us understand, when supply is much higher than demand, it's very tough for prices to hold on. Even with some sort of pricing, informal pricing arrangements which cement companies might have with each other, which uh, has played out at various points of time. So I would be very surprised if any significant price hikes sustain in the market. So let's see how it goes. But I don't think that is a bigger story. But if volume growth picks up and many of these companies have been controlling their prices, the costs very significantly through renewable energy investments, cutting down on fuel costs, etc. So that's helped them maintain and sustain their margins. So volume growth combined with cost controls should lead to improvement in margins this year. Sustenance of any significant price hikes looks tough to me.
Sandeep, overall, back home, how do you see the Indian IT companies moving? Because of late, we are actually witnessing that these tier two IT companies, be it from the small and the mid end of the market, they are actually inching higher. But do you believe that the market should now start to looking beyond 6 months? And how do you see the up move in the IT?
So IT stocks got severely beaten down. Now we have seen some bounce back from extreme beaten down levels. Now from here on, it's tough to build a significant bull case because of various factors. Even the rupee has appreciated, so that also will not support the profitability of these IT companies. And on top of that, discretionary demand spend will remain subdued for some time, given the economic data which is lately coming out of the US, which indicates a growing slowdown. So I think the case is more for a phase of range bound stocks rather than any significant upside or downside.
Right, so that's the take coming in on the IT space.
Sandeep, believe that this block deal is happening at a discount, but given the recent commentary from the management, because I remember that on the day of the results, the stock has actually shot up. Do you believe that the stock or the company could find buyers at the lower levels, apart from the fact that it is and it will be a big block deal?
Yes, I think they would have launched the offer only after they have had a feel from the buyers. So I guess that could go through. But I think given the fact that the stock's done well recently, and also the fact that pure housing finance companies will see margin pressures going forward, it's not a very exciting company.
Right, so that's the take coming in on PNB Housing Finance, given the fact that you've seen the huge block deal take place in the pre-market block deal window. So that is PNB Housing Finance right now. That is the way how it traded over the last 1 month or so, uptick of about 18%, and most of that uptick is all thanks to the earnings as well.
If you like this video, then like, share and subscribe to ET Now.